7 stupidly simple rules that took me from zero to over $1 million in my investment portfolio. If you think that sounds impossible, stick around. I'm going to show you exactly how I did it, and how you can start doing the same thing today, even if you're starting with nothing. Most people think building wealth is complicated. They imagine Wall Street traders, complex algorithms, and a level of risk they just can't stomach. The truth is, the financial industry wants you to believe it's complicated, so you'll pay them hefty fees to manage your money. But the core principles of getting rich are surprisingly simple. The hard part isn't the what, it's the doing. It's about overcoming the psychological barriers and the temptation to chase quick, shiny objects. I was trapped in that cycle for years, living paycheck to paycheck, thinking that my next big win was just around the corner. It never came. The real change happened when I stopped looking for shortcuts and started following a few timeless, boring rules. Let me take you back about 10 years. I was working a decent job, making what I thought was good money, but at the end of every month, I had almost nothing left. I had student loans, a car payment, and a nasty habit of treating myself because, hey, I worked hard, right? My net worth was actually negative. One day, I saw my bank account after all the bills were paid. It was a depressingly small number. That was my rock bottom. I was terrified. I realized that if I lost my job, I'd be in serious trouble within weeks. I decided right then and there that something had to change. I didn't have a rich uncle or a winning lottery ticket. I just had a burning desire to escape that feeling of financial insecurity forever. I started reading every finance book I could get my hands on, from The Intelligent Investor to The Simple Path to Wealth. I noticed a pattern. All the truly wealthy people, the ones who built their fortunes from scratch, followed a similar set of rules. It wasn't about timing the market or picking hot stocks. It was about discipline, consistency, and time. So, I created my own set of 7 rules based on everything I learned, and I promised myself I would stick to them no matter what. It wasn't easy at first. Saying no to a fancy dinner or a new gadget felt like a sacrifice. But soon, I started seeing my savings account grow, then my investment account. The small wins started to feel better than the instant gratification I used to chase. And if you're finding this story relatable and are ready to start your own financial transformation, do me a quick favor and hit that subscribe button. It helps the channel a ton and ensures you won't miss the next steps of this journey. Alright, let's get into the step-by-step breakdown. These are the 7 rules that completely changed my financial life. Rule number 1. Pay yourself first automatically. Before I paid my rent, my bills, or bought groceries, I paid my future self. I set up an automatic transfer for 15% of every paycheck to go directly into a separate investment account. It's crucial that this is automatic. If you have to manually move the money, you'll find excuses not to. Automate it and pretend that money never existed. You'll be amazed how quickly you adjust your spending to what's left. Rule number 2. Live on less than you make. This sounds obvious, but almost no one does it. This is the foundation of all wealth. You cannot invest money you don't have. Track your spending for 1 month. Just one. Use an app, a spreadsheet, whatever. You need to know where your money is going. I guarantee you'll be shocked. Once you know, you can start cutting the fat. Not your morning coffee, but maybe the 5 different subscription services you forgot you had. The goal isn't to live like a monk, it's to be intentional with your spending. Rule number 3. Avoid bad debt like the plague. There's good debt, like a mortgage on a sensible home, and there's bad debt. Bad debt is anything with a high interest rate used for a depreciating asset. Think credit card debt for a vacation, a loan for a fancy car you can't afford. That 20% interest on your credit card is a guaranteed negative 20% return. You will never get ahead if you're constantly paying interest to Chase or Citibank. I cut up my credit cards and used a debit card until I paid everything off. It was painful but liberating. And speaking of liberating feelings, if this is making sense to you, tapping the like button is a great way to let me know you're getting value from this. It really helps the video reach more people who need to hear this. Rule number 4. Build a freedom fund first. This is your emergency fund. Before you invest a single dollar in the stock market, you need 3 to 6 months of living expenses saved in a high-yield savings account. Life happens. Cars break down, people lose jobs. Your freedom fund is the buffer that prevents a small emergency from turning into a financial catastrophe. It gives you the peace of mind to invest for the long term without panicking and selling at the worst possible time. Rule number 5. Invest in boring, broad market index funds. This is the core of the strategy. I don't pick individual stocks. Why? Because I, and probably you, are not Warren Buffett. Trying to beat the market is a loser's game for 99% of people. Instead, I buy the entire market. I put my money into low-cost index funds like VTSAX or a simple S&P 500 ETF. These funds own a tiny piece of thousands of companies. It's the ultimate diversification. You bet on the long-term growth of the entire economy, which has always gone up over time. It's boring, but it's incredibly effective. Rule number 6. Never, ever try to time the market. This is the biggest mistake new investors make. They see the market go up and they get greedy. They see it go down and they panic sell. The secret is to keep buying consistently, whether the market is up, down, or sideways. This is called dollar cost averaging. When the market is down, your fixed investment amount buys more shares. When it's up, it buys fewer. Over time, this smooths out your returns and lowers your risk. My rule was simple. I invest the same amount on the same day every month, no matter what the headlines say. Rule number 7. Increase your investment percentage every year. Remember that 15% we started with. The goal is to get that number as high as possible. Every time I got a raise or a bonus, I committed to saving at least half of that new income before it ever hit my main checking account. My lifestyle barely changed, but my investment rate soared. I went from 15% to 20%, then 25%, and eventually over 50%. This one rule will supercharge your journey to $1 million faster than anything else. Let me know in the comments which one of these 7 rules you find the hardest to follow. Is it paying yourself first? Or maybe avoiding the temptation to time the market? I read every single comment. So, what were the results? Here's the proof. After 10 years of consistently following these 7 rules, my portfolio crossed the 7-figure mark. The first 100,000 was the hardest. It took me almost 5 years, but the next 100,000 took less than 2, and it just snowballed from there. This is the magic of compound interest. Your money starts making money, and then the money your money made starts making its own money. It's a virtuous cycle. It wasn't one big win. It was thousands of small, disciplined decisions stacked on top of each other, day after day, year after year. Now, let's talk about the common mistakes to avoid. The biggest one is getting impatient. This is not a get-rich-quick scheme. This is a get-rich-for-sure plan. You will be tempted by crypto, by penny stocks, by your friend's guaranteed hot tip. Ignore it all. Stick to the plan. Another mistake is listening to the financial news. It's designed to make you emotional and do something stupid. Turn it off. Your strategy doesn't change based on who's president or what the Fed did yesterday. Your strategy is to buy and hold forever. The last mistake is lifestyle creep. As your income grows, it's tempting to upgrade your car, your house, your everything. Resist this. The gap between what you earn and what you spend is your key to wealth. Keep that gap as wide as possible, for as long as possible. So, what's your next step? Don't just watch this video and go back to scrolling. Take one action, right now. The easiest one is rule number 1. Open up your banking app and set up an automatic transfer. It doesn't have to be 15%. Start with 5% or even 1%. Start somewhere. The act of starting is more important than the amount. Build the habit first. That is your first step on the path to your first million. Thanks for watching until the end. If you want to dive deeper into how to set up your investment accounts and choose the right index funds, check out this next video on the screen. Remember to subscribe for more no-nonsense financial advice. See you in the next one.